Good morning, everybody, and thank you, Sanjay, for the wonderful thing. And welcome to everybody for the session. It is very nice and heartwarming that week on week, so many people comes and try to do, and that is the purpose of Right Horizons to do the awareness and education on how you can do yourself and achieve your goals with a peace of mind. And that's where we always says that we are trying to guiding you to achieve your financial goals. So that's a purpose of our Right Horizons and us to make sure that you do it yourself, you learn yourself and do it. So when somebody was asking, we had a board meeting yesterday, and then somebody was asking, called me for having a webinar, and the one of the corporates, and they asked me why you don't charge. And I always tell that maybe this is my belief, maybe right or wrong. When I start charging for my knowledge, which is not my main business, my knowledge will not be valued. So I was just always think that it's always good to have a more knowledge, take an aware decision, and make sure that you are control of what you are doing. Because most of the time when I do the webinar, it may be we have around 10 or 15 topics which keeps changing, but the stories and the life stories which always happen when I meet many customers, on an average I meet around 2 to 3 a day, and those stories are coming across, and that's where I'm trying to share. You can start relating it and do what is best, because most of us, I believe, 80 to 90% are aware of what we wanted to do, but somehow the, I can say, inertia of starting an execution always takes a backseat. Or I'll give you a life story of one of our customer. He's a director of the very well-known IT company, and he says that, Rachna, I wanted to do retirement planning. I'm getting retired within 2 years. So can you help me to make sure that I get a, like how every month I get a salary? So I portfolio give me the salary. I said, very good. That's a very nice. So I said, okay, how you are managing till now? So he says, Rachna, the thing is, you will surprise to know, last so many years, I was doing whatever I have. I was not even aware because I was not able to trust somebody. And then I asked first question itself, then how you're coming to me, and because I don't know you. So he says, the reason I'm coming here because my first cousin brother itself is with you, and he is very, very, very comfortable with you, though. That's the reason. So that's a one more thing I always says. There is no time is a late or early, because he said that I think so I'm very late. And I always believe it's better to be late than never. So anytime, whenever you think it's a good time to start, please start, because the power of compounding, the power of, I can say, achieving the goal, the having a best peace of mind and sleep, that is what I believe it in. And I can tell you every time that if you are in a track and you have a control, you will get the best of sleep and the best of happiness. So I'll just go. Today is a very good, I can say, topic of my own, because that's where people always says I should diversify or not. Okay, that is the one thing which I have noticed in many, many, many people. Yesterday again, I met one of the person who told very clearly, Rachna, I have a six real estates, but I don't have even a 20 lakhs of liquidity, and what to do because I'm not able to sell. And actually, his portfolio is much, much, I mean, the net worth wise, it's a very, very good portfolio. But even we or anybody is trying, it's not easy to do it. So, some concept, I believe the fundamental and the concept never change. Even it's now 100 years or 2000 years back, the same concept is the same works in a diversification also. So, sometimes I keep telling people what may be your portfolio. I'm talking about overall portfolio, including PF, BPF, insurance, and real estate. Don't have a fixed or non financial or liquid assets more than 40%. There time you have more than 40%, you will always have a risk of any of your goal getting impact. So another customer has 3 houses in Bangalore, and he's been old customer, I can say 17, 18 years old with us. And we have planned very clearly that we will sell and that will be utilized for the son's education, because he wants our sons to do undergrad around 2 crores. And when I think so 3 years back, his son was about to go for US and he was not able to sell. And then he came back to me and he said, Rachna, what to do? I was not able to sell and it is impacting my kid. And I then he says, I didn't listen to you. I said, no, it's not listening or not listening. It's a always we think the difference between, I always tell the people manage fund versus advisor, or I can say anybody doing other than you, is not attaching the emotions. So when something is going down and we feel it's not okay, we'll cut the loss and sell it. But when it is yours, you don't feel like cut the loss. You'll say, oh no, you have an hope it will go better and it'll go better. And that's where it happened. He was not getting the rate, what was the right as per him. And I remembered him telling that there was a 10 lakhs less quotation come from the buyer. And I told him maybe 4 or 5 years back that it's better to take it F, even though it's a 10 lakhs less as your expectations, because the market was down. And he was very difficult to get the education loan for undergrad. It's very not so easy. He was very desperate. We were having a tough time to make sure to two ends meet, which is one of the biggest goal for him, to make sure his kids education happens. So these are the few examples I can tell you where we somehow buy the very fixed asset, or I can say highly we can take care of the, because our tendency is to buy a plot or we buy the flat or house or whatever, that it will appreciate very high. But if you see the data and all, the data doesn't say so much. So I'm not saying there's something wrong in buying. We should buy. There's nothing wrong in buying. But make sure your portfolio is not fixed for more than 40 to 50%. Okay. So we are talking what questions people have. So I normally ask these questions and I keep saying whenever the diversification comes, or what comes in your mind when you're talking about investment, what fear comes. So I was having a person, she is a single lady and she's 54 if I'm not wrong. And she was trying to explain me, Rachna, I want a high returns because my monthly expectation is 1 lakh. And when you wanted a pay, she came for retirement planning, she wanted a 1 lakh now till 85 years, which is almost 30 years. And my portfolio is not able to do. So how to take care of that? So I was just trying to say either we reduce 75 to 65 or 60, we can take a lesser inflation, we can do step up inflation, we can try to take care of some of the, maybe you, she's a consultant, you do some consulting work for some more time. So there was so many questions was coming, but her point is, I don't want her to take risk, but I wanted a 14% returns. So this is, I don't deny it. Maybe many people have it, and I personally believe I'm a very conservative person. Of course, right horizon itself is a risk adjusted returns perspective, but as I person also are very conservative and I go with the data. I don't talk without data. So I always say is that go for 10 years some data. It is like if you wanted a low risk returns, how much is your FD giving, how much is your anything is giving, like a whichever we call low, it can be insurance, PF, PPF, and NSC. You can say debt funds, you can say bond. Whenever you see 10 years, it will be 5.5 to 6%. And when you take a Nifty or anything, it will be 12 to 14. So when I'm looking at data of 10 years, kind of it, the risk for a longer term, when you take for thing, is 12 to 14%. It's not that we have not given our funds, or single fund doesn't give. It is given quite a lot. Even coincidentally, my debate to myself and to the people is also the same. RPMS has been coming in a top two, top three across the India, and it is given across 94 to 56%, 60% XIRR for last 2 to 3 years. And people just call me because you have given, and I don't like to take those customers because that expectation setting is wrong. And I said, no, even from since inception of 5 years is 18 to 19 if it is a mid and small. If you expect 60%, please go somebody who can give it. Even though our fund has given last 3 years, it doesn't mean it is going to give next 3 years also. So these questions comes in your mind. So be very clear what risk level you want and what return you can expect. So it is just a weighted average. It's not that a lot of, and I feel very not sad, feel bad sometimes when somebody says I got missold, I got this. I always believe the best things for you all have is Google. You can just Google the one liner. You will get 20 things, read 20 pages, and you are actually known what is right or not right. So these are the things we need to make sure when you are thinking a diversification. What is the money you are investing for? What manage risk you can do? You can reduce risk, you cannot avoid the risk. Reduction of the risk normally comes for the longer duration. You can take it SIP, you can do profit booking, you can do a diversification and asset allocation. So there's a little difference between asset allocation and diversification, which I'm going to take it today. Very, very important is tax. It's a post tax or not post tax. And what is the tax implication? I'll give you again another example. Somebody called me and said, because bonds have been doing good, and I said, okay, you can invest in bonds. Then he says, no, I wanted a bond for a longer term. Then I said, you take it a mutual fund which is investing in a bond. And he asked me why you are recommending that. So I said the only reason is because you are looking for a bonds and you don't wanted a interim money. So I prefer to give it as a, because they're also indirectly looking in a bond, because mutual fund comes under capital gain and you're looking for 5 years. It is after indexation, you will be paying around 7 to 8% tax. But if I am taking you the one-to-one bonds, the interest comes yearly and interest are added to the income. So you will be paying 35 or 37 or whatever slab you are. So sometimes it's very, very important. Those questions you should answer, write it, find it. You can do yourself. How to make my children ready for managing my business or know my finances. That's another thing we are trying to do. How to take care of our customers, next generation or the new generation, how to make sure that they are ready for finances, because that's the one thing which I felt it in our education system. They never explained us that how you should save and importance of saving or importance of power of compounding kind of thing. These things keeps coming, and I'm assuming when I'm talking here you will explain to your kids. I have two kids around 21 and 15. I do that and I make sure, because I have separate portfolio for them. So I have given them an access to explain them why I have done what I have done. More than that, I keep telling them to know the value of money. So I give them once or twice in a month to run the full house. So you should know the expenses and the rates and how you should save that money if things are going high. So sometimes I was very surprised that things changes when we are spending the money. So they will say, okay, we wanted to go out or spend some more time money. And when they started spending, they said, no, 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 the money has not there. So we'll not take the outside food. So thing keeps changing when you make somebody accountable for the money. Assets and investment very clearly have to be very clear on what investment is linked to which goals. Okay, it is fair enough if we have enough money. You are just looking appreciation after appreciation. The very good trends which I love to feel about nowadays, that very easily nowadays people have started thinking how to give back to society, and that's a very good movement has come, that okay, I've taken care of my retirement, my education and myself, so how I can take care. So next another question is coming is, lot many people wanted to have an experience, because experience is also an investment. Somebody wanted to experience, it can be vacation, it can be different things. So after certain time, how you wanted to do the investment and to the society. So this is the another part of it. I always say there's a difference in diversification and asset allocation. Diversification is selecting of investment different asset class to reduce your portfolio risk. It's a most of the time, like I can say, the negative correlations are like a gold and the market. Okay. Sometimes we always see is the how the dollar currency versus geography. So these are the things which you have to take care on a volatility basis on a portfolio. So, way to diversify, this question keeps coming because nowadays people have an access, they are very comfortable to go across the classes, they can go within the classes, or they can go even the countries. Okay, so higher the portfolio goes, people are looking. You will surprised to know nowadays when I speak with a lot of customers, they ask me how to get the citizenship for the different countries, and that's becoming a one of the need for them. So they says, no, I wanted to know how many countries I can have the citizenship. So there are different ways to diversify across the asset class. You can do it. I'm just trying to say asset class is like, let us say mutual funds. So within a mutual fund, you want a mid cap, you want a small cap, you want a hybrid, you want a debt funds. You can do that within the classes. You can have a different across classes, which is a very common thing where you take care of equity, you take care of a debt, you take care of a bullion or the commodity. That's another level. And across the country, which I already told, are very very common nowadays. There are so many things are coming where you try to see approximately how you can diversify to the different countries. At least I know many people are started investing in US and other country because they think it is easier when the kids goes for an education. You will be able to take care of that because there will be no dollar impact. Lower risk and higher returns. This is the another myth people have been having, a lower risk and can I have the higher returns or not? But it's always things when you diversify, you are we call a beta. So beta is goes down and you will be able to get a higher returns when you diversify properly. So three things is very common. A lot of people have been doing that: equity, real estate, fixed, and gold. I don't consider gold as such, which is a jewelry. So this is another debatable point because in India we are very very linked to the our gold jewelry. Even if you ask me, I will say okay, this thing is given as a gift, as a wedding gift to me, or it's a anniversary gift or something. So you don't want to sell that. So same thing when you are staying your own house, your net worth is more, but you will not sell that house to for your retirement planning. So similarly, we always says gold is a bullion when you have an ETFs or you have a mutual fund or something. Otherwise, a jewelry I don't consider as a gold until unless you are okay to sell and take care of the other needs. So when you have it, if you see the different returns on a different asset class makes a lot of difference. So most of the time, when you have a different combination as per the market, you will always feel that it is good to have a diversified portfolio and get it a good returns. So what is an asset allocation? So asset allocation involve dividing the investment option amongst the different asset class such as stock, bond, cash, and determine the good mix on your as per the risk level. So to give a better view on asset allocation, I always feel this is the best way. I have always felt it is if you go to the doctors and they will say that there is a good balanced diet, should have a protein, you should have a carbohydrate, you should take a vitamin D, you can take which is good for your health. Similarly, when you go for any investment portfolio, so they will also ask you the same way. What is your goals? What is your risk level? What is the duration you are looking? So, for example, another person came to me. She was, if I'm not wrong, 74. And she asked me, can I go for an equity? And I myself is very surprised because 74% is, and I said, Auntie, it is not so good for you because it may goes up, it may go down. So it is good to have it a lower risk or a moderate risk. So she says, no, 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 I am aware of a market and I wanted to do the thing. So she took a very high risk and she's gone with a very, I can say, It was, if I'm not wrong, 70% on stock and 30% on the, sorry, 70% on equity and 30% on debt. And then suddenly, even the market is not corrected around 10-12%. She started calling me and saying that, Rachna, I'm little scared because it is now lesser than it's giving me FD, it's lesser than this. So this is another sentimental I have seen. People wanted to take a risk, but not aware that what risk means. Whenever the portfolio goes down, then they start comparing with an FDs. And when the portfolio is doing good, then they will start expecting from the benchmark. So you should, instead, I never do that. I always believe in have a good portfolio mix, expect as per your risk, and then whatever it comes, it's a, I can say, bonus. So you should always say that, okay, I am a high risk, I should get 12 to 14% return IRR, XIRR year on year returns perspective. So if I'm getting 17, 18, it is a good thing, I can say so. So similarly, in your balanced portfolio or your investment portfolio, have very clear what you want for each goals. Because goal wise, the age is, we call a tenure is different. For example, if I am 45 and I'm going to retire at 60, I have 15 more years. I can take little more risk. Okay. But if I am 55 and I want to retire within 58, I better don't have a risk. And that's why if you see as we grow older, your diet also keeps changing because our metabolism is not the same. Same thing here. So your risk is not the same. So what are the things which actually are the ingredient to take the decision on diversification? It is like a how much is your income and what is your expense. Very, very important. So if I have a good income and expense is less, you are ready to take more risk. What is your age and assets? Like a how much you have in assets and how much you can have the risk appetite change in. Means if I'm just giving example, like somebody asked me, they are, I think so yesterday got public that what are the top 10 richest people in the world. And now the Adani is coming second and third. Then, but still so many people are not taking because these richest people list never come with a debt. It just come with a turnover. So if you see that his turnover is so good, but his 80% is on debt. So I don't know. So if I was in one other person, I may not have it as a good thing because asset is, I have to make sure that his liability should be minus. So that's another things when you have a higher loans, higher things, liabilities, you should take a lesser risk. Returns is the very big parameter. How you take care of a risk and return is a correlation. Time horizon is the thing. So these are the parameter which is taken, considered when we make a portfolio asset allocation. So what are the factors? As I told you, if your age is higher, your risk capability goes down. If you are young, it is always the best thing to take a higher risk as long as because the time is in your side, the compounding is in your side. You have the best of ability to take care, and you are in doing a what you call salary or income or business. So which is a good thing. So you should do that part of it. Higher the income, higher the risk tolerance people will have it because they are comfortable to take a risk. I'll give you another example. One of the customer, of course, as an advisor, we were not allowed, and not personally also. Even though I'm a part of many, I can say crypto things, and that was a fade around 1.5 year back. Every person will come and say that why you are not recommending, why you are not doing when everybody is doing and all this stuff. Even including my son has come and told that you don't understand and all. My friend is asking that Amitabh Bachchan has taken this and he gave me Hajar celebrity's name. And you will surprise to know last 2 weeks, SEBI is trying to make a norm that who all can promote what all investments. Because of those influencer, people have lost a lot of money, especially on crypto. And then we didn't do it. And that one guy came to me and he says, Dachna, I have done a 1 CR. I'm talking about 6, 4, 5 months back. And he said, I've done 1 CR. And now that money is 20 lakhs. Coincidentally, last month he said it becomes zero also because it's NPA now. Then I asked him, when I told you, why don't you took it? For me, whenever you wanted to take a risk, you should take a risk in that point that if that become a zero, it is not impacting when you don't know much about that product. And it was very surprising. So sometimes we go with the herd, we go with the noise, we go with the what people are saying. It's a 10x, 20x, 30x. My money has come, but didn't realize how the risk is. And it's not that I have done something great, but the only reason we were not doing, of course, we were by law, we were not able to do. And second thing is, there was no concrete backup that that is coming as it. So, for example, if you have gold ETF, you know that somebody has a physical gold, which is a thing. If it is real estate, you can touch and feel. So, there was nothing we can make those tokens are real or not, what is the value. So sometimes you should know how much risk you can take is always that it should impact or not impact your goals. That's the one way I always try to see. Lower the expense, you can have a higher risk tolerance. This is the all-time grandma's rule that never put all your eggs in one basket. That is the best part, example given on a diversification. Liabilities should be always lower because loans and liabilities are lower. You can take a better cash flow and go ahead. Higher the time horizons, you can take a more risk capability. That's another options we always say. So this is the best part. Higher the risk, higher the return. Not always happen like I have told you. Crypto is one of the example itself. I don't know anyone of you remember there was an MCX platform which again become 60,000 crores was a typical thing. I'm talking about 2009 or 10. I still remember this customer. Of course, he's now my customer also. He came and he told me that MCX Rachna is giving me around 3% a month. Why I should come to you? And I said, please go ahead. I am the one person who always believe that you have a right. You are, I respect your money and that's hard earned money. So you should take your decision. And I don't think so. I can give you 36% return and then to month on month, somebody is giving you 3%. Please go ahead. So he has gone and put it in those MCX schemes, which gives a month on month 3%. And I think so he came after maybe a year or 1.5 year back when MCX becomes zero. And he didn't get his principal at all. And I think so that was the time 2009 or 10 when the full like a platform becomes zero. So again, that was a scam. They called and whatever it happens, but people didn't get the money. So that's another thing I always feel. When something is so true and good, no, you should know what to believe or not to believe. Somebody cannot go just diversify the concept. So when somebody tells me that somebody is giving me 30%, 40% returns, I always say, please go ahead. And because my understanding is very clear, if somebody is giving a 30 to 40% return, he must have made his own money. Why the hell he will do it in 7K, 10K, even classes or coaching or anything else? He must have will be sitting next to the Ambanis or whoever it is. So we have to be very clear. The fundamental is something too good is also not too good. So you should know much, much more on a risk level. Importance of asset allocation is how to take care of volatility, reducing the risk over the part of things. Make sure that you stay always long term. Don't have emotions in your investment. Again, example I'll give you a not to have emotions like I remember our first car came and then I was very not so happy to sell the first car and then Anil told if you don't do it, it will not go even go as a junk iron ka paisa also and then you better you sell it and you started doing it after 1 or 2 years we felt okay there's no value, so of course we were able to sell because he is more practical person. And most of the time when we try to do an emotions we always take the wrong I can say call. So don't put an emotions when you are doing an investment. Take a good stock of debt and equity. If it is underperforming, don't have the always thinking that I will be getting a much higher. Always have the goals and make sure as per the goals you are able to achieve or not. And that's the best thing I ever do. This is my all-time high slide, like a anything available as a concept. It is that on all the investments. You can say market link, not market link. You can say fixed. You can say debt. You can say equity. So I use word called fixed return and non-fixed returns. Fixed returns are returns which is told in advance what are the returns you are going to get. So, for example, if you are going to the bank, they will tell you for 3 months FDs I am giving 4.5%. Or if for RD I have a 5% if you stay 366 days. So they tell in advance. Similarly, in a post office, PF, PPF, of course, PF, PPF will change as per the budget, but they will tell you in advance. Similarly, in the insurance, which is a traditional insurance, they will tell you in advance. So it means that you are almost, I can say, not guaranteed, but you are aware of how much it is. 99% you will be getting it until unless some NPA or anything happens and then you take care. So fixed returns are always, you can see post tax post thing will be around 5.5%. And how that is done? Because most of these are going under the buying the government bonds. So anybody will have to check what is a fixed return investment should be. You can just check the government bond yield, not interest, yield. Yield is the indirectly like an interest because it is not primary, because it's a secondary. Secondary means you're buying from the market, not directly. It's like not NFO or IPO kind of it. So it's a secondary. So, what is a non-fixed? Why I use the word non-fixed? Nobody normally use it. The reason it's like a market link, or the reason I'm calling it non-fixed or variable is you don't know the returns until you sell. That is the reason. So when you're selling, you will see what is the market rate. When you're selling of real estate, you don't know what is the buyer rate. You will not sure what is the gold rate. So that time you sell it, you will know the what is the returns you made it. It may be profit, it may be loss. But that is the reason you talk about equities. You can buy direct equities or stocks. You can buy through mutual funds. You can buy through PMS. Nowadays, is a very big fad has come on non-listed equity of startups, AIF. A lot of people started going on those side. Gold can be physical, mutual fund, commodities, real estate, and ULIPs. So these are the overall scenarios where you can get investment from. This I already spoke about: low risk, low return, high risk, high returns. These are the things you should know. And to reduce the high risk, high returns, if you're taking longer time, it's never happened somebody has lost money above 8 to 9 years in equity if they stay longer. Asset allocation, most of the time it goes with the age, because that is the reason we have to make sure how much you can have the more aggressive. That is the best part of it. So I always tell a people, one is your age wise, another wise is you should see how you can make sure to achieve the goals very comfortably also. But you can't say that I'm doing a retirement planning at 55. I wanted to do the full equity like that auntie. And it is very, very difficult. And sometimes I have seen very few customers who says, no, I still wanted, if you want me to continue with you. I normally write a disclaimer in my mail that I'm not agreeing with, but because you are doing, I will go ahead and explain you. Because it's a very easy for a customer to say that, okay, I wanted a high return and I'm okay to high risk. But you won't believe the time the market just fall even 5%, they are the first person to call us because they have never understood the risk. So what are the different options which comes as I explain you in a different asset class and the diversifications? So most of the time, equity is a one all-time options. I always say it's a good to do. Easiest way is start doing your SIPs in a longer term in a mutual fund. That's the best way to start. I have done the same thing I've been doing for more than 26 years. It is the best way to do. It is a passive way. You don't have to think so much. Just find it out what to do. So, what options are available in equity? You can buy stocks or shares directly. A lot of DMATs you can open. You can do trading. You can do FNO. I will not recommend anyone to do this till you make a good portfolio or you are being very aware of, because these places your, I can say, risk levels are very, very high. The easiest way to start is always start with a mutual fund. Take an SIP of 30 to 40% of your net, whatever you have. Convert those SIP into the balanced funds, large, mid, and we call a hybrid funds also, and we call a multi funds, or we call a flexible funds. You can have the mid and small cap funds. If you wanted a new, you can do ELSS fund, which will give you the tax benefits. These funds in equity will give you the good fund. Nowadays, lot many places people have started doing in a PMS. Of course, PMS AIF comes for I can say a little bit of high cutoff. Cutoff is normally is 50 lakhs in 1 CR, but people wanted to do that to go into the VC funds kind of it, non-listed funds, real estate funds through AIF and other things. Debt options are doing good. Please try to do it. We are assuming next time onwards, RBI will start cutting the rates and you will not be able to get the good bonds rate or even the guaranteed pension plans, because as of today, guaranteed pension plans are giving you 6.5 or 6.8 tax free. So if anybody wants a good things, buy now. That's a good debt options. Retirals are always good. PF, PPF, NPS. These are the best part to make sure that you take care of your retirement pension. Mutual fund is all time good. Bharat bonds have come again. If you want, please buy it. It is good. There are so many times the capital protection funds comes. It depends on the people, but yes, NLDs and others are there with the capital protections. You, if you have, you can do that. Bonds are normally says about tax-free bonds, perpetual bonds, corporate bonds. See the ratings, normally try to take a double A plus. And these are the new good debt options, which has been doing very good. Other investments are real estate, global funds, and VC funds and AIF. These are the little higher risk. I always believe real estate you should take most of the time for yourself occupied. But nowadays, if you want, you can take land or REIT nowadays is available even in the market. These are the commercial renting. Commercial renting and others, I can tell you, is gone not so great after the COVID. I was speaking to one of the business center people here who has been having a 7 in Bangalore, and he says, Rachna, my occupancy is not gone back to 50 plus. Because the first people nowadays they are saying they are flexi timing, they will bring only 3 people coming, 3 days week. So that is becoming a not the best viable nowadays. So to conclude, before I take any questions, is good to diversify and reduce the risk, maintain the asset allocation as per your risk profile. Periodically, at least I'll say twice in a year, you should go through and realign your portfolio. And if you continue with a good discipline long term, without fail, I can guarantee on yourself that you will achieve your all the dreams with peace of mind. With this, I conclude and I'll be happy to take questions.
Thank you so much, ma'am. I would like to request all the participants to, write if you have any queries or question in Q&A section on the screen. As of now, I think we have one suggestion or query. Mr. Madhusudan wrote, is 12% CAGR over a long-term safe expectations? Since my portfolio's current yield is around 12 to 12.5%.
To answer that, I will 100% say that yes, and then too you have it in a hybrid. So hybrid, you can think of it's like a 30% in a debt and 70% in an equity. So if I do 12 or 14% 70 weighted average plus 30% of 6%, you will get 10 to 11%. So as per your risk level, you should be able to get 10 to 11, and now you're getting 12 plus. It's always an extra delta. Yeah.
Thank you, ma'am. Mr. Nitin wants to ask question. Can I allow him to talk?
Please allow. Hi, Nitin.
Hello.
Yes, Nitin, good morning. Tell me. You can speak, you can unmute and speak. Nitin, can you unmute?
Okay, we will come back to you, Mr. Nitin. We have one question in Q&A section. Mr. Ravi Rawat, I'm 53. I'm 53. How much should I invest per month into equity or debt to achieve 1 CR corpus in 8 to 10 years?
One minute, I will just share my Excel and I'll do on spot. Can you see my Excel?
Yes, ma'am, we can see that.
So, what is in age says 53. What is the question? Can you repeat? I will do it online.
I am 53. How much should I invest per month into equity or debt to achieve 1 CR corpus in 8 to 10 years?
Three, yeah, 1 crore. Time. Can you see my Excel now?
Yes, ma'am, we can see that.
So I am just trying to say, just let me see equity and debt. I'm just saying 70-30. So if I'm expecting a 12% returns, and this I'm expecting a 6% returns, my weighted average is my weighted average is coming 10% with the 70-30 as an hybrid. So you are saying my future value is 1 crore, correct? It's 1 crore. Yeah. No, 10. 1 crore. So that is called PMT, is how much money you have to do. So I'm doing at 10.2% returns divided by 12, and par is 10 into 12. It's 10 years into 12 months. And my future value is 1 crore, correct? You have to save around 48,000 approximately. So I'm just giving approximation so you can do things. If I say, if I do 80 and this I do 20, it will become 10.8. So if I do 10.8 here, it will become 46. So it's easier for us to say that how much money you have, that much you can do it. But on an average, whatever is a portfolio, let us say 50%, because we're 53, I'm just giving a round off. 50% should be a debt and 50% should be equity on an average. So I hope I answered. Can I have another question? I'll keep this Excel because in case somebody wants, I can do on spot. For others, as you know, I've used the word PMT. PMT is how much monthly he has to pay. So I have taken a rate of, as you can see here, what is the ratio of debt and equity, 10.8. I have taken 12 years, 10 years into 12 months. Here I have divided by 12 because 12 months, and my future value is 1 crore. That's the way I arrived at. Yeah.
Thank you, ma'am. I will read out the next question. Next question is from Karnam Prabhakar Rao. How to select the right asset class and how to do right portfolio rebalancing? Once in how much period we want to rebalance our portfolio?
See, rebalancing is a word depending on a market. It is not a static. I can say that we should always do rebalancing and all. When we do in a retirement, at least when we make a cash flow, we keep rebalancing every 4 years, debt and equity, debt and equity. But till you are not at, I can say, started your goals, we do rebalancing in a few times. So let me tell you where we do rebalancing. So for example, we call realignment and rebalancing. These are two different things. Rebalancing is when you are converting debt and equity hybrid. Those are differences coming. So I have a kid's education coming after 3 years. We wanted to move whatever we have saved for the kid in equity into the balance fund to the debt fund within a 2 years. We will do this movement, because when the kid is going for an education, you can't say, okay, market is down, I can't take the money, correct? So you will be doing that time. So just before the goal achieved, you will be moving things to the debt where it's not market linked. So you balance that time. You do a balancing sometimes, which we call a profit booking, when your market is going to do. So we do realignment and rebalancing. So realignment is between the asset class, or I can say within the diversification, as I was talking about. We assuming as of today, let me tell you about right horizons. Our market view is that mid and small cap will not do so great as the large and hybrid funds. So we were moving from mid and small cap, all the we call a long term funds, because we don't want to have a much tax impact, to move it to the hybrid fund. So we are moving to the debt now, because we are expecting a market fall, and we will start moving from debt to equity maybe after January February time, when our market is low. So we are rebalancing that time also. So whenever the market view or your fund management and research time, people are saying there is a market cycle may change for some time before it take a bull, you do change that time also. So there is a rebalancing. On an average, I can say, if the market is volatile, it may go twice in a year. Otherwise, it depends on the goals to goal, and we do that. But realignment happens much often. We can say minimum once or twice in a year, we will be doing it. Yeah.
Thank you, ma'am. I will read out the next question. So I think Mr. Prashant wants you to share your view on sovereign gold bond and short-term duration fund for a time frame of 5 years.
Yeah, short term duration bonds are very good nowadays. You should buy on a liquid, take care of, and gold bond also we have been saying. But only thing is, what I always believe, gold bonds are actually in the long term is not going to go good until unless you wanted to take care of a gold for a marriage of the kid or something like that. But on a overall portfolio, we always says it you should have a 5% of a portfolio in gold to give a counter. Nowadays, gold is not becoming so much as I can say inverse proportion like before. The reason I can give you last 2 to 3 years, even in India and the US, previously when you have to print a note or a print a currency or do that, they used to always hedge against the gold. Okay. But last 3 years, that rule has gone back. So now there is no hedging against the gold for the currency printing. And that's one of the reason it's not so much inversely proportionate. Yeah. So I have the another
Thank you.
question.
Yeah.
I have some personal and credit card loans which I have to pay interest around 18%. Can I draw from EPF and clear the loan, because I get 8% in this and I pay 18? It's a good idea if you can do it, but I'm not sure EPF people allow you to remove for a loans clearance. They normally allow you to do for a kid's education or a wedding or something big milestone. If you're able to do, it is a good thing. Yes, you are right. 18%, the arbitrage or the difference is too high. To just giving you the background for others also, when I take a session for induction or the novice people and all, this is the another thing I always tell. Whenever we are selling, because I'm saying people think that I'm old, but yes, but the concept doesn't go wrong. I always try to tell you, credit card and personal loan, when we are using, it may be used for the correct thing. But I always believe, we always think it's an easier way to do it and we will pay later. But these things, even I'll give you example. If you've taken a 1 lakh from the credit card or a loan, even you pay till 90, your EMI is not reducing. You're still paying for 1 lakh till do that. So it's a very high. And then those credit card and personal loans have a one more, which we never sign. When we signing, we keep signing because we wanted the money. That if you do pre-closure before time, then also they ask for the money. So whenever you are doing all those things, be careful. Try not to utilize these things is better option. Yeah. Then another question is, what if you have invested in equity stock directly? One cannot do rebalancing and realignment. Why not? You can sell it because sometimes you feel that pharma is not doing good. So you wanted to exit the pharma and you wanted to go into the some other funds, a diversified fund, or nothing is there. You may take in an ETF itself. Most of the time, again, right horizons view is that US is going to be very bearish for the next 10 years, and IT is going to have an issue within a 1 quarter. Now we are somehow managing because of our dollar appreciated. But yes, people are, we have a lot many customer being myself and Anil in IT industry, and our all batchmate friends are in from IT, so they have very high ESOPs. So we are diversifying them and putting into the different sectors. So there is nothing that you cannot do it, but it is better to do it if you have an IT stocks. Yes, Ashok, for retirement at 65, if you have a good corpus, one can continue equity as there will be buffer on 100% because I have a one customer. She has sold more than 40 CR the land, and and by her even we normally will require only 50 or 60,000 rupees. So we are paying. So she has made the will that this much amount I wanted to give the kids, so we have made a separate portfolios for them, and which is going at very high, means equity portfolios for 12% and 14% they have been getting. So whatever she wants in a monthly basis, we have put it into a, I can say, conservative, which is 70% debt and 30% equity, and we are paying every month. So it's a good thing, but you have above the corpus record of your need, and it is planning for go for next generation or for yourself also. You can take the higher risk.
Thank you, ma'am. We have some questions in chat box. I will read it out. The
Yeah.
question is, there is a lot of news about markets falling drastically in 2023. Can we take risk of investing in equity?
100% without fall, we should always utilize a market fall. And if you don't have it, you can take a book profit. We don't know how long you can. Please book the profit now. Keep it in a debt funds, and maybe after January, February time when we are assuming the market fall, please do either STP or switch that time.
Thank you, ma'am. The next question is, do index funds good for assets allocation?
What's the question?
Do index funds good for asset allocation?
Good index fund is asset allocation. So normally index funds are itself is a, I can say it has already been a balanced one because it goes as per the benchmark, like a Nifty index or any index. So there is a difference. As of today, it is not a matured market. When there is a mature market, ETFs do very good. But if it is, you see any data on passive fund versus active fund, active fund normally give you around 2% higher or 2.5% higher than a passive fund. But if you don't have a time, money, energy, ETFs will give you, that's the best thing because you're doing a benchmark against them. So it's not diversified, it has been a passive, and that's where the people do that.
Thank you, ma'am. Mr. Madhusudan just asked, he just continued the question, Mr. Ravi asked. So he's saying, I'm also the same age. So is 1 CR corpus really enough for post-retirement? That too after 10 years, what inflation reduce the real return?
Can you just tell me again what is the question?
So actually, Mr. Ravi asked for this 1 CR corpus, which we have calculated in Excel. Mr. Madhusudan continued that question and asked, I am also in same age. So is 1 CR corpus really enough for post-retirement? That too after 10 years, what inflation reduce the real return?
So can you see my Excel?
Yes, yes, ma'am.
So I am doing the same thing. If somebody is there and we are taking 85 as a thing, how much per month they will get? So I'm doing future value at the rate of 8.10. Okay. So I'm assuming he is investing 46,000 to create a 1 crore. Hello.
Yes, ma'am. Yes.
I'm just going to the Excel because my one phone call came. I'll just close it also. So I'm assuming you have a 1 crore after 10 years. Okay, so you are, let me say, you have it around 1 crore the time you are at 60. I'm just giving example, or let us say 1 crore when you are at 63. So I am saying a rate of return I will take at 1.88 percentage divided by 12. So I'm taking 85 years minus 63 into 12. I'll say PMT of, let us say 50,000. I'm just going to give you the two answers. One is if you have 1 crore rupees and you are age of 63. So I've just written the formula. You will be able to get the inflation linked 30,000 rupees from 63 to 85. Okay. I have taken a 6% inflation and 8% return as a balance fund. So what I have done it here, it's called real rate of return 1.88. Indirectly, you can think of 8 is returns and 6 is inflation, which is, you can say 2%. But there is a formula called rate of returns, real rate of return, which is, I will show you, it's come to 1.88 divided by 12. 85 is your longevity, means your life till 85 cash flow I have taken. You told me 10 years you will be get 1 crore. So you will be getting at 63 age 1 crore into 12 means monthly you will get it. So if you are getting a 30,000 approximately, so you will be able to get it across. So this is the another thing. So whatever I feel, if you are in a conservative and you wanted a monthly payout, on an average 6 to 6.5%, on a very safest side you can take it, because you have to take care of a little bit of inflation also. So if you have 1 crore, 1.5 crore, 6.5%, you should able to get a month on month for that time. Yeah. Next question, please.
Thank you, ma'am. We have some more question. If you allow me, I can.
Yeah, please go ahead.
So one question is: car loan at 9% is better to close after paying for 3 years or continue paying EMI? Total loan term is 5 years. Please suggest.
Car loan is at 9%.
Yes, ma'am.
So
Car
if
loan
you
is at 9%. Is better to close after paying for 3 years or continue paying EMI? Total loan term is 5 years. Please suggest.
see, if you have already opted for 5 years and you paid for 3 years, it's better to pay, because now, if you see your EMI amortization, last 1.5 year, you are just paying the principal actually. You're not paying the interest more. Okay. Your interest is already gone in the first 2 years or 3 years of years on the EMI based. So now, even if you pay for outstanding indirectly, it is a principal. So your cash flow is higher. Second thing is car loan normally have a pre-closure charges also. So that doesn't matter if you wanted to do it. It is the same thing if you want to have a payment. So I always believe it is a trade-off. Okay. So if you feel that your market is going to go more than 9%, so that amount you put it into STP base and you will get a 9% and above returns, and you continue that part of it. Or otherwise, you do a partial removal and then start the SIP of that EMI.
Thank you, ma'am. Next question is: I'm presently 51-year-old, 9 years service remaining. Can I invest in mid cap and small cap funds, or I invest in balance advantage funds?
You can still do the both. I'm assuming you are working. He's written, yeah, he's in service, so he should be able to do that, and divide all of them into the part mid and small and balanced fund as a good basket, where large cap, multi cap, and everything is there. So you should be, because within 3 years, multi and mid cap and everything will be doing good. Next 1.5 year is very volatile, but we are very, very bullish. It's called multi bull run for India. How to
Thank
select the good ELSS funds? So many. You can actually find it normally as analysts, they will go which are the stocks they are working. They should not be more concentrated on the single stocks, but the easiest way is because it's a lock-in fund, it is always have a good thing. So you can just return, see the return of 3 and 5 years and then choose it across. If I have a bulk corpus, say 20 lakh, where should I get a decent income for retirement? So I don't know your age, Ravi. Actually, there are so many different things are there, because if somebody wants immediate or they want a deferred. So I'll tell you now, if somebody wants for a retirement decent things, there are deferred payments are coming. Even though XIRR will be 5.5, 6. So don't get confused between 8 and 12 sometime, because suddenly people comes and tell me कि their LIC is giving 8, somebody is giving 12. So because they are deferred. So first 5 years they are not giving. So you have to take XIRR when they are not giving also. So absolute is 8%, there is no doubt about it. Or absolute is 12 if you are deferred more than 8 years or 10 years. But yes, those are also a good things to, because it is, some of them are giving tax free. There are few, if I'm not wrong, Max and Tata have it single premium deferred payment tax free. Very rarely this combination comes. They're also good for a retirement to give you the things till your 99 years. Thanks, Robert, for always helping us. Yeah.
Thank you, ma'am. We have one last question which we can take.
Yeah, please tell me.
I'm 24 years old now, and currently I have 20 to 25K monthly income. So where should I invest? Is it good to take loan or borrowing from relatives? Please suggest if we need a financial service.
24 years old and currently I'm earning. Where should I invest? So I always believe that at least 4 to 5,000 rupees you do SIPs, and you must be able to save tax. If not by PF, PPF, do ELSS on an SIP. That should be the best thing. Don't take a loans or borrowing in a younger generation time when you have not much requirement. Please make sure that always do the 20 to 30% of your net income as a salary saving. This point 30K is not enough post 10 years, so 1 crore is not sufficient. Yes, it depends on a lifestyle to lifestyle. This 30K is inflation linked with a 6%. But yes, it depends on, so we have to go actually backwards. If I wanted, like for example, in this itself, if I wanted, let us say 60 lakhs, 60,000 per month, I should be having a approximately 1.92 crores of money. Are good things? Yes, it is very, very good. Please buy it now. If you are looking at bonds more than 3 to 5 years to save the tax efficiency, you do the mutual fund, which is buying the similar bonds. Again, P2B lending has been new things, something I don't take risk as I started with. So it is a good platform. People have made money, no doubt about it. I have seen. I have never recommended, never done it, because I have seen people losing the money also.
Thank you, ma'am. I think we have done with the questions.
So with this, I have come to the conclusion. I'll be happy to help anytime. Please try to implement, because most of the time we do have a knowledge, but where we lack because of a time or we don't implement. So it is like that when we have taken a gym membership, we know it is good for us, but we don't go and exercise. It's not going to help us. So similarly, try to do it, have fun, enjoy, have a great happiness, and make sure that you achieve all your goals. And there is nothing impossible in this world. Everything is possible. Only thing is we need to execute all. Thanks a lot.